Hi everybody, I'm going to update Siacoin with you today. I've just updated my data. Yeah, it starts back here, December 2015. So I've got from here to here a 5-wave impulse up, and down here a 3-wave zigzag back. So it's in another 5 up. Let's go back down to the daily. Here's the end of primary 2. I'm going to actually do a weekly for this, so we can see the data, the bigger picture. It's important to put Elliott Wave into context, and this should be viewed on a semi-log scale. So here's my 5 up, starting here, 1, 2, 3, 4, 5. Let's have a look and see how long the third wave is in relation to the first. I'm just going to calculate that difference. The third wave is 19.79 times the length of the first wave. So following normal behavior for cryptocurrencies, it's extremely long in relation to the first wave. I had someone make a comment saying that they thought there was a limit to a length of a third wave in relation to a first. There's no Elliott Wave rule that limits the length of a third wave. It can be as long as it likes. And looking at this chart, the structure within cycle 1, you just would not want to put primary 2 and primary 4 in any other position. From this low to this high, this looks like a perfect 5-wave impulse. This is on a semi-log scale, remember, so it makes it look like the third wave is shorter than the first, but it absolutely isn't. I'm reading these numbers here, 0.02218, I think that's a 2. Here the first wave is 0.001121. That's another handy feature of motive wave. Just click on the degree you're looking at and it tells you the wavelengths. You don't have to do any calculation. It's quite handy. Let's have a look at the length of the fifth wave in relation to the third as well. It's really long. The fifth wave is 4.89 times the length of the third. So not as long as the third is to the first, but it is longer by nearly 5 times the length. In a normal market, well, in, for example, an index or a commodity, that would be considered very, very, very extreme. But for a cryptocurrency, this is normal. I see this repeated. So following 5 steps up, there's a 3-step back pattern, subdivides quite nicely as a zigzag with an extended wave A and a relatively short wave C, and that's okay, they don't have to be equal in length. And now I've got another 5 up here, followed by a double zigzag, a 3-step back pattern there. So now this wave count is expecting a third wave at primary degree within a third wave at cycle degree. So this is very, very bullish. Let's start to get some structure in here. Now I think this low, 0.013228, is overlapping here, 0.014 here. So I can't see 1, 2, 3, 4, 5 over here unless it's a leading diagonal. Let's consider that. I don't think it's going to work, but let's get some labels in here and just check that. Okay, so I'm checking the wave lengths. The third wave is longer than the first, no problem there. The fifth wave is not longer than the third, it's shorter than the third. The third is 0.018, the fifth is 0.016. The fourth is longer than the second, so the diagonal would be expanding. It adheres to its trend lines, the trend lines are diverging, all the rules are met except for the length of the fifth wave. Well, I have actually long suspected that the rules for diagonals need to be slightly adjusted to say that sometimes the third wave can be the longest in both the expanding and contracting diagonal, but I'm not going to rewrite any of Elliott's rules. I'm going to stick with the rules that are laid out in Frost and Prechter until I have some solid research to support any rewriting of rules, so I'm not going to do that. But it's been a suspicion I've had for years. I just need to do some more work on that before I'm going to be prepared to rewrite any rules. Maybe I'll consider that as an alternate with that strong caveat. Well, okay, so because of this overlapping, I can't see 3 and 4 over there. So I'm going to see this over here. Actually, no, I don't like that at all. I'm going to see intermediate 1 over here, and I think intermediate 2 may be continuing. Well, let's see if this subdivides as an impulse. No, I want to see this here. Let's expand this out so I can see what I'm working with here. I'm trying to figure out if intermediate 1 will subdivide as an impulse. I'm having a little bit of trouble with this. Could this be an ending expanding diagonal? Oh yeah. Oh yeah, that actually looks pretty good. Yep. Oh great. The 1-3 trend line slightly overshot and beautifully adhered to here. That's a really good looking diagonal. Okay, so I've made sure that the middle of the third wave is okay. Okay, that looks fine. I want to see intermediate 1 over there. So now the question for Siacoin is the pullback complete here? Is that low sustainable? Or are we going to see this low breached? So the question is intermediate 2 complete? And I don't think so, because from here to here, this doesn't look like an impulse or a diagonal. It doesn't look like a motive wave structure. It looks like a corrective structure. And I'm just looking at the structure of A as well, but here I can see a triangle ending here, a running contracting triangle for B. That looks good. And so this upward movement from this low to this high fits really well as a zigzag. But what about minor A? Oh, okay, double zigzag. Yeah, I want to see a triangle in the first correction here. Motive wave won't let me do that. Okay, within a flat correction, both waves A and B should be corrective structures. The only corrective structure an A wave cannot subdivide as is a triangle. But it can subdivide as a multiple zigzag. Multiple zigzags can replace single zigzags in a position where a single zigzag may occur. And so an A wave within a flat correction can be a multiple zigzag, and that's fine, but motive wave won't let me do that. So I have to bring it in manually. I see a triangle in here, and that's why I want to see this as a double zigzag. And here's another interesting point. If this is a triangle, as I have it labelled here, it can't be in a second wave position, because a triangle may not subdivide as the sole corrective structure in a second wave. It can be part of a combination if a second wave is a combination, but you can't have a triangle as the only corrective structure in a second wave position. So if there's a triangle here, that means from here to here, it's not a 5-wave impulse, because you can't label it 1, triangle for 2, 3, 4, 5. I'd put that there like that. And B, maybe some kind of multiple in there at a lower time frame. Okay. Well, I suspect for Siacoin it might not be complete for this pullback. Where's my second wave label? Let's do a... I'll put an invalidation point in here and then calculate a target. I've changed the scale for this daily chart to an arithmetic scale so that the Fibonacci retracements sit correctly, because when you change it to a semi-log scale, it applies a semi-log function, and that's not right. It should be arithmetic. Fibonacci ratios are arithmetic, I don't think we should be manipulating them. So I did that because I calculated the length of, I'm trying to calculate a target for minus C. Where is this downward wave going to end? I expect this low is going to be tested, but if minus C was to reach 1.618, the length of A, that would take it below the invalidation point. So that's the smallest Fibonacci ratio I could use to calculate a target. That doesn't work, so I put in a Fibonacci retracement for intermediate 1 from this low to this high. Here's the Fibonacci retracement. It's already past the 0.618 Fibonacci ratio, so that isn't helpful either. I don't use 0.782, that's the square root of 0.618. It's not accurately a Fibonacci ratio, it's a manipulated Fibonacci ratio or derived ratio. It's certainly absolutely useful in trading, but I don't use it. So let's see if I can use the waves within C to calculate a target for C to end. If that is 4, I think that 3 might not actually be over, so I can't do that either. Oh, how annoying. Sorry, but I'm not going to be able to calculate a good target for you for the pullback for Siacoin until minute 3 and 4 are complete, and I can use the ratios within minus C. And I suspect they're not complete. So all I will say is I expect the pullback to end below this low here, 0.013228, but not below this low here, 0.007672. So somewhere in this zone, at least a new low below this, if this wave count is correct. That's the strong caveat. If this wave count is correct, I expect a new low at least slightly below there to avoid a truncation and a very rare running flat, but not below here, because intermediate 2 may not move beyond the start of 1. So that's my conclusion for Siacoin for the short term. For the longer term, let's just put some labels in here. I've got a really, really bullish wave count for Siacoin. Let's expand this out. So the longer term picture for Siacoin is essentially really bullish. Okay, stepping back and having a look at the monthly chart. This first 5 up, 1, 2, 3, 4, 5. I've added some notations to this to remind me the length of this third wave is 19.79 times the length of the first wave, and the fifth wave is 4.89 times the length of the first wave. These are not Fibonacci ratios, these are just the arithmetic lengths of the waves as it unfolded. If cycle wave 3 exhibits the same relationship to cycle 1 as primary 3 did to primary 1 within cycle 1, then cycle 3 would reach 19.79 times the length of cycle 1 at 2.316. So that's my target for the bull market for Siacoin for a third wave. And when that's done, we'd then expect a fourth wave to unfold, maybe to last a year to 2 years, and then a final fifth wave to be even longer than the third. So I won't be able to calculate a target for the final fifth wave until I have 3 and 4 complete, and I know where 4 ends and 5 begins. So that's my long-term target for Siacoin. Here's my short-term expectation, a new low below this point, and mid-term expectation overall for the bull market to continue. And that's it from me. I will put some classic TA charts in the post on my website. If you click the link in the description box below the video on the YouTube channel, I'll take you through to that post on my website, pureelliottwave.com, and you can look at my classic technical analysis charts, and I'll be judging whether or not there is support for the short, mid and long term outlook here from the Elliott Wave analysis. Thank you so much for watching, and thank you so much again for all the support from subscribers on the YouTube channel. I really do appreciate your engagement.